Hi, I'm Stacy Francis of Francis Financial. Thank you for joining us today for this market update. At Francis Financial, we're a fee-only investment specialist focusing on helping individuals create robust portfolios to help them make sure that they achieve their financial goals, not only today, but also the long term. Today, we're going to discuss the current market conditions and what it means for you as an investor. We're also going to talk a little bit about recent headlines and consider all of these events in a historical context to better understand what does it mean for you? What does it mean for the long-term investor? So let's get down to it. Well, I think the biggest word to describe today's markets is uncertainty. And there's a lot of factors that are leading and adding to that uncertainty. Key issues, like you can see here, tariffs, layoffs, deportation policies, regulatory shifts. We're also seeing potential tax cuts, the extension of the tax cuts that we saw earlier, and as well as a possible government shutdown, or as we'd say, threat of a government shutdown. All of these things are leading to a lot of uncertainties in an environment where, well, the market can be volatile. And above all, the market and, well, you and I, investors, we don't like uncertainty. And so far, with a new administration, it does create more uncertainty. And also, we are seeing changes daily in changes in the administration and the different regulations that they are putting in place. So because of this, that's why we are getting these very wide market swings. If we look at overall what's happened, well, the Nasdaq is down about 11% year to date. So from January, the S&P 500 is down 5% year to date. And when you think about the volatility you've seen, like in the last couple of days, last couple of weeks, I know for me, seeing that the S&P 500 has actually really only declined 5% is actually quite surprising. If you look at the recent headline, you would think that it'd be a whole lot more. And even if these numbers may seem a little concerning, I want to let you know that these really do reflect normal market fluctuations. But you know what? Not all of the market is down. When we say the market, we often think of US stocks, but our clients are invested in robust portfolios. It's very important to make sure that you have exposure to developed international, which is up 9% this year so far. Emerging markets up no slouch either, up 4%. And US bonds, we often don't think of are too exciting. Well, this year they sure are. They are already up 2% so far year to date. So those of you that are clients, of course, you have this wonderful, robust, very well-rounded, diversified portfolio. So you have been really insulated from some of those drops that we've seen in some of the other areas. And we talked a little bit about market volatility and that it's really a normal part of investing. And I have to tell you, temporary downturns are normal. They happen regularly and they're not indicative of necessarily a prolonged decline. This here is a chart with some really, really cute pictures. Everywhere from a little teddy bear to a cub doll, all the way to a grizzly bear they have to be a little careful of. And it talks about drawdowns in the market. And what a drawdown is, it's a measure of volatility, and it looks at the peak high of the market down to the trough and during a specific period, and how wide was that drop from, again, the peak of the market down to that very bottom. And what I want to tell you, what I think is really interesting, we looked at this all the way back to 1945, and we found, look at that, 43 times where the market dropped anywhere from 5 to 10%. And how long on average did it take to recover to get right back up to where it was? Only 3 months. That's why we've got that cute little teddy bear there. I used to collect Vermont teddy bears. Now, right there, we've got a cute little black bear cub. And 15 times since 1945, the market has dropped anywhere from 10 to 20%. How long did it take? Not even a year to recover. You can see 8 months. Now we're getting up more to a black bear. We have quite a few black bears in Vermont. In fact, we have quite a few on our property because we have a stream that runs down from the top of Stratton Mountain, and the bears just kind of follow it. And actually, bless them, for some reason, they like to hang out at our hot tub. Well, actually, those bears are pretty darn timid. And here we are, representing a 20 to 30% loss in the market. That has happened 6 times. And what's interesting, how long did it take for the market to come back from that potential 30% loss? Only 7 months, so just a little over 2 years. Well, the last one, that last picture, it is a grizzly. And I don't know about you, no one wants to be around a grizzly bear. There have been 6 times as well where the market has dropped anywhere from 30 to, can you imagine it? A 60% loss. But even those times of a 60% loss, how long did it take the market to come back? Well, a little over 3 years. I know that this is a lot to take in, but what I'm trying to say is that if we're seeing a 5% loss so far in the market in, let's say, the S&P 500, that has occurred 43 times. How long on average does it take for the market to recoup? Well, 3 months. So we're not talking about long term. And just because we see a drop in the market doesn't mean that it's going to be a negative year. In fact, I wanted to show you this chart. Okay, there's a lot going on here, but I went in and added a couple little areas to make sure that you could read it a little bit better. So here back in the 80s, 1980, there was a loss during the year of a total of 17%. So at one point, the market had a 17% drop. But look at this. For the year, well, not too bad. The market turned out to be actually up 26%. We're going to keep on going. Look at that, a 34% loss in 1986 at one point, but that year still positive, up 2%. Now let's take a look, negative 19%. No one would like that, but you sure would like a 27% return. We saw that in the late 90s. We're keeping on going. We've got a loss of 28%, 28%, nowhere near the loss that we're seeing today. But guess what? What happened for that year? That market roared back. You were boasting a 23% return. Who would want to miss out on that? Not me. All right, we've got 2 more. So hang in there with me. We've got a loss of 34%. Market did really well in 2020, came back, and you had a 16% return. And then finally here, 2024. So 2024, people don't think about it because last year was so darn amazing, but we did have a drawdown at one point of 8%. And however, we celebrated at the end of the year, had one of the most robust stock markets ever with a 23%. Pretty darn good. So again, it's normal. This may not even be a down year. And I love this. I love this chart because that 5% drawdown, that 5% we just saw, that correction, well, that typically happens 3 times a year. A correction of 10% typically happens once a year. A correction of 15% you usually see at least once every 3 years. And a drop of 20%, you're going to see on average every 6 years. And what does that mean? 73% of the times the market has a positive return. I have to say, I like those odds. That means 3 out of 4 years, you are enjoying a positive return. And with all of these corrections that you can see listed here on the right-hand side of this slide, the left is the most important. On average, even with these pullbacks, from 1926, you enjoy a 8% return. Now, I have to tell you, that's not something that I would be upset about. So again, going all the way back with even these very, very, very significant drops in the market, investors have enjoyed an 8% return on average since 1926. All right. I know I'm trying to make this short and sweet, and I don't want to in any way make light of the situation. There's a lot of political uncertainty. There are a lot of political changes, and it's understandable that a lot of this change is creating anxiety. But what I want you to know is that market corrections are normal. They are healthy. It doesn't necessarily mean that we're going to have a down year. And most importantly, I want you to know that we are here for you. We are monitoring your portfolio every single day. And most importantly, we're here to answer any questions you have. That's why we are here. We welcome any questions you have about the market, about your current portfolio, about the investment strategies we have in place to protect you. And our goal is to provide clarity, to reassurance in this time of uncertainty. So please do reach out, and you can reach out to me, Stacy, Stacy, at francisfinancial.com. In addition, we're going to be having a special longer presentation featuring our amazing investment experts here at Francis Financial. We will be sharing that information with you as well. Thank you for listening in, and we'll be seeing you soon.